keep that round of applause going for Jason Wilson, cannabis research and banking expert at ETF Managers Group. Come on out, Jason.
Thank you, Neil. Awesome. How's everyone doing today? I'm glad to see that you all are practicing appropriate social distancing. Looks like closer to 6 yards than 6 feet, but it's all good. So thanks again for coming. Thanks, everyone. It's great to see everyone in person after coming out of this COVID hibernation that we've all been suffering through. I think just to kind of kick things off, I'll do a brief introduction. My name's Jason Wilson. I'm the cannabis industry expert at ETF Managers Group, which is based in Summit, New Jersey. $7 billion of assets under management across 20 different funds makes ETF Managers Group one of the leading issuers of thematic ETFs. And their specialty really is coming out with innovative products, products that are differentiated and novel. And to that point, 75% of the funds they've launched have been first to market products. When it comes to the cannabis industry, we have 4 investment vehicles available to investors. First one was MJ, which we started working on in 2016, actually got to market in 2017. It trades on the New York Stock Exchange under the ticker MJ, of course. Has about a 4-year track record and about 1.1 billion in assets under management. So that makes us not only the longest standing cannabis-focused ETF in the US, but also the largest cannabis-focused ETF globally. In addition to MJ, we've launched MJ US, which unlike MJ, which focuses on the entire global picture, MJ US focuses specifically on companies that operate only in the US. Those are our long-term investment vehicles. On the short-term side, we have 2 trading vehicles, MJXL, MJIN. MJXL provides 2 times exposure to the global cannabis industry. MJIN is the inverse of that. And again, both of those aren't really long-term investment vehicles. They're trading vehicles that help investors manage, short-term disruptions, price movements, and be a potential hedging vehicle. So that's a brief synopsis on who I am and who we are. And just kind of, talk about our topic here, investing in cannabis and what it means. From our perspective, we really look at the universe of cannabis companies and put them into 2 categories. The first category that we look at is companies that are primarily directly engaged in the cannabis industry. And what we define that to mean is they actually touch the plant, they're growing cannabis, they're cultivating cannabis, they're selling cannabis. So that's our primary bucket. Our secondary bucket are companies that are more involved in a more ancillary or tangential way. So again, they have cannabis revenues, they're fully in the industry, but they're not the necessarily touching the plant and or selling cannabis products direct to consumers. So those are our 2 buckets. On our first category, you'll recognize a lot of the names that we tend to hold in our funds. It's the household names like Tilray, Canopy Growth, Cronos, Auroras. They're all the companies that we've had here, been on the New York Stock Exchange for quite some time, and they're domiciled in Canada but operate with a global footprint. On the other part of our primary holdings are a bunch of US operators, and you've met a bunch of these people here today. They include Curaleaf, Green Thumb, TrueLeaf, Cresco, companies of that nature. So those ones tend to be put into our MJ US fund. So core identity factor with those is the majority of the revenues are generated from growing and selling cannabis. That's all they do. And the core difference between them is where they do it. Right? So we have 2 categories of them. Some have this global footprint, some are just in the US. And we can talk about the pros and cons of that a bit later on. When we look at the second category of holdings that we have, we really see them in a number of different industries. So looking kind of at the top left, a bunch in the consumer products and accessory space. So think Turning Point Brands, think High Tide. These are all companies that sell accessory products. So as much as we want to obviously have people buy cannabis for recreational medical uses, they also need accessories to use it, to consume it, bongs for etc. Our next bucket of holdings really goes over to the equipment and hardware companies. Scotts Miracle-Gro, through their Hawthorne Group, has put a significant investment into the space, tremendous revenue growth through that division. Hydrofarm, Agrify, Grow Generation, all these companies sell hardware, equipment, materials to retail and industrial growers. Pharma and biotech. This is, one of Jazz Pharmaceuticals acquired GW Pharma a little while ago. I mean, this has been a great success story. They focus not on medical marijuana per se, they're focusing on pharmaceuticals that actually contain specific cannabinoids for specific, for diseases and treatments. So going back to GW Pharma, they were the first, with Epidiolex, had the first drug that's approved by the FDA that contained a plant-based, not synthetic, but plant-based cannabinoid. And that's for the treatment of childhood epilepsy. So that was a big move. Jazz Pharmaceutical acquired them not too long ago. Agricultural science and regulated products. It's an important area when you think of the cannabis ecosystem. Part of cannabis is marijuana that contains THC. Another large part of it that's actually federally legal in the US is hemp. So to meet FDA and USDA regulations, DEA regulations, we have to ensure that that hemp does not exceed 0.3% THC. So companies like 22nd Century will actually produce seeds and strains that make sure that requirement's met. And we're seeing a lot of investment from tobacco companies. They've made investments with a number of the Canadian licensed producers as well, given their understanding of the science behind growing a very similar crop, tobacco, and how that applies for cannabis to get purity in strains, et cetera. Technology and services is a big, fast-growing sector of the cannabis space. IIPR has been out for quite a while, but we also have AOC Gamma that's in the real estate finance sector. Riv Capital recently received a big cash injection from Scott's Miracle-Gro to expand their US footprint. Weed Maps, I'm sure you're all familiar with them. They just de-SPAC'd not too long ago. And Akerna, which actually sells software as a service, primarily to operators that operate on a full vertically integrated basis where they have to have seed to sale tracking and reporting to the state regulator. Wellness product is another big segment and could be a large part of the future growth for the industry. We have companies like Charlotte's Web, obviously, but also in there are the brands that are underneath a lot of the global licensed producers. So they look at Manitoba Harvest. They sell, it's available in the US and Canada. That's owned by Tilray. BioSteel, which is a functional beverage manufacturer. They're the official drink for the LA Lakers and the Philadelphia 76ers, for example. They're wholly owned by Canopy Growth. Reliva is a CBD brand owned by Aurora. It's available in a number of C-stores across the country. So these are another way that we see the global players entering the US and gaining distribution shelf space, which is going to become critically important on legalization. And last but not least, we have processing companies that do, again, they're not growing the plant, they're not selling the plant, but what they're doing is they're focused on clean, pure extraction as well as testing. So that kind of rounds out the universe of stocks that we have in our funds, and it's kind of how we look at, how we allocate our money between those two buckets. We definitely focus on the growers, the cultivators. That's the primary weighting that we give in our funds, but we don't forget these guys as well, because there's a lot of people that would say you can make a lot more money selling picks and shovels than you can mining. When you look at global sales and where the industry is really going and where it's been a phenomenal story, and it's completely dislocated and from obviously the price performance we've seen this year. But going back to 2018, I'll try to be quick on these numbers. I'm sure you guys know them most verbatim by now, but over $10 billion in sales globally, 2018, close to 15 in 2019, 21 billion 2020. This year, it looks like we're well on our way to a $30 billion year, and if projecting out forward to 2026, based on various addressable markets that are opening up and the penetration rates we're seeing in those markets, we're going to be north of 60 billion come 2026. So it's interesting, right? The funny thing is our stock market, at least specifically with respect to cannabis, looks nothing like this. I mean, 2021 was supposed to be a banner year. We're coming off the back of obviously a Democratic win, a successful Senate runoff, the blue wave, so to speak. And there was a lot of hope and expectations that will result in meaningful cannabis reform. Clearly, that hasn't come, and that's creating a lot of anxiety. So yes, the markets generally have been volatile, and there's a few other factors that are affecting the industry as well with respect to how the US stocks are custodied and things of that nature. But the general driver to the sell-off, even though we've had 40% sales increases year after year after year, we're seeing the inverse of that in a correction in the stock prices. It's based primarily on the fact that we're just not sure what regulatory reform is going to look like in the US. And that's a critical factor. I mean, it's the irony of all of this is the US operators are operating in the biggest markets. They have the strongest revenue numbers. They have the strongest sales growth. They have great margins. But until we have a proper federal regime for them to operate in, there's a bunch of issues. From an operational perspective, they're dealing in cash. That's cumbersome. It's risky. It's expensive, right? When you think of how they have to finance, they can't just go to the bank and get traditional commercial financing. Neither can they go to your more, to the capital markets for debt financing. If they need equity financing, again, it's hard for them to go to the capital markets. They're stuck working with tertiary dealers out of Canada and listing their stocks on tertiary stock exchange. So that, again, hurts their valuations, their multiples, things of that nature. That is obviously part of the problem. But the other part of the problem is understanding, and it affects both the global operators and the US operators equally, is what does the landscape look going forward? I mean, there's so many ways it could go. I mean, there's a lot of money suggesting it's going to look something along the lines of what the alcohol industry looks like, federal legalization with state regulation. And if that was the case and we had true interstate commerce, there's a big question as how your single state operators, these companies that are operate on a full vertically integrated basis, compete with the InBevs, compete with the Molson Coors, compete with the big tobacco companies that understand how to move a regulated product, how to brand it, how to market it, most importantly, how to distribute it and get shelf space for it. So there's a lot of anxiety relating to that. There's also a question relating to whether or not, if we have interstate commerce, will we have low-cost states shipping their flower everywhere else? I think we heard Jason Wild this morning saying maybe yes, maybe no. Probably not on the premium stuff, maybe on the marginal stuff. So that's going to affect their business plans as well. The point is we don't know, and it's hard to build an empire around a country where you don't know how to operate. Internationally, it's a slightly different story. In Canada, we have a full federal regime. We understand the roadmap. If you look at what's happening in Europe, we have a roadmap there as well. In fact, we've actually seen progressive legislative reform starting at the UN, and now that's trickling down to many countries in Europe. The problem there is right now, even though we know the road, it's a long road with a smaller, at least today, a smaller city at the end of the road. So it's a smaller addressable market, smaller revenue opportunity, and a longer haul to get there. That's what's suppressing when you look at the canopy growths, the Auroras, the Tilrays. What can we expect going forward? Obviously, the biggest catalyst that we're going to see driving this space is substantive reform. We need to see someone step up and bring something else. If you think of what we've seen so far in the US since the election, is the Safe Banking Act has popped its head up again for a fifth time through the House of Representatives. It's trying to make it through the Senate. It's being attached to the defense bill. Doesn't sound like that's going to work. And the main reason is not that Republicans or Democrats don't want banking reform. What they do not want is banking reform to get in the way of social and restorative justice reform. So what we've also seen is the MORE Act through the House and the Cannabis Administration and Opportunity Act through the Senate. The problem with those bills, highly anticipated, is they're reaching too far. The fact that they legalize is fine. The fact that there's some level of social and restorative justice is fine, but sometimes that's gone too far. There's some serious tax provisions and expenditure provisions in there that they're just too extensive to get the requisite number of Republicans to vote in Senate in favor, and let alone all 50 Democratic senators. So that's the problem that we have, is we haven't seen real, it's very binary right now in the legislation that's coming up there, and there's no one really stepping up to say, here's pragmatic reform. It's really not an issue of partisanship. It's simply an issue of finding something that splits the middle, and in a increasingly time where we seem to have this bigger divide in opinions on everything, we're left goalposts, right goalposts on this issue. And again, that's scaring investors. There is so much hope and expectation that this will get done while the Democrats control the House, the Senate. Obviously, they have the president in place. If that doesn't get done, we have midterms coming up, more and more anxiety creeps in. Different story internationally. The largest piece of legislation that affects Europe is the Single Convention of 1961. That's their drug treaty that governs how all European countries basically work and operate with respect to cannabis. So in December 2020, the WHO recommended that cannabis should be not descheduled, but rescheduled, at least as an intermediary step, and the UN actually voted to do that. So they moved it from Schedule 4, which is the most restrictive provision in the single convention, to Schedule 1. And what that does is it allows every European country to move forward on their own reformative plans. And that's really what we're seeing. I mean, prior to this, we already saw dabbling. A number of them approve cannabis-based pharmaceuticals, obviously. Many have medical marijuana programs. And we're seeing strong growth in Germany, the UK, Spain, Italy, as an example. But since that we've seen this rescheduling happening, there's a number of new programs coming on board. France just launched their medical marijuana project. We've seen reform in the Netherlands. They're a very bizarre place. Medical marijuana is legal with a prescription. Recreational is not legal at all, but there's a drug policy that allows it, except you can't buy it from anything that's manufactured in the Netherlands. So they're forcing it into illicit markets. It's a really bizarre place. Anyhow, they're taking steps to address that, including running their own pilot program to allow issue 10 licenses for the Netherlands to grow their own cannabis rather than getting it through the gray market, specifically from Morocco. So we're seeing great progressions there. Ireland, again, Denmark, there's a bunch of countries. Greece has voted to legalize, and they're setting themselves up. They effectively, in many ways, want to be the Nevada, the Las Vegas of the Mediterranean, if not the entire EU. So we're seeing a lot of progression. It's going to happen. And if you think of nothing else, and this is happening right now before our eyes, this is why we're seeing a lot of, part of the big reason why Tilray and Aphria emerged was to combine Aphria's pharmaceutical distribution in Europe with Tilray's GMP production capabilities that they have over there. They see this coming. They're getting ahead of it. They're one of the larger exporters to serve that nation. Aurora has strong medical marijuana presence over there as well. We've seen Curaleaf even. They made a recent acquisition over there. Village Farms also made an acquisition to buy one of the new Netherlands licenses. So all of that is coming together in a meaningful way. But in the interim, until we see this regulatory reform, we're going to continue to be in this whipsaw state, a lot of volatility, and continued anxiety amongst investors. I guess I'll leave it at that. If any of you guys have any questions, I'd be more than happy to take them.
Questions in the room? I have a question. So you said that a lot of the portfolio focuses on growing. Is that correct?
Sorry, on what?
A lot of the portfolio focuses on growing. Is that correct?
On growing?
Yes.
Yeah. So what we try to do is we are when you look at the funds that we launched, MJ, which is our largest one, is really primarily growers, but it doesn't have any of the U.S. operators on there. And there's a lot of people that do want exposure to that. At the same time, there's a lot of people that are worried about exposure to that, because if we, for instance, have another situation where maybe we have a change of control in Congress or with the president, the rug gets pulled out, the kind of Cole memo again gets revoked kind of concept, you could see a pretty hard sell-off with the U.S. MSOs. So that's why we created MJUS. Unlike other ETFs that are out there where you invest in growers and it's Canadian and US, we're giving our investors the option to they can allocate, they go 100% US, 100% global, or pick your allocation in the middle by just basically toggling between our two funds. So it's resonated quite well.
Wonderful. And then any nuggets that investors can take away for what they should be looking for that you've learned from operating this fund?
Big things to look for is really in the industry is continue to keep an eye on sales, obviously, but keep an ear and an eye for what's happening with reform. There's actually, what is going to happen with the Safe Banking Act? Is there going to be a way to take that, pull it out as a standalone bill, and actually wrap some social justice provisions around it to get something through in early 2022? If that happens, that's going to be a great catalyst for the space. So again, keep an eye out for that reform. That's going to what's really determine what this model looks like, lets everyone set their sights, gets everyone on board. And I mean, the growth is there. We just need to have a proper operating environment to conduct our businesses in.
Good stuff. Thank you for being with us today, Jason.
Thanks very much. Have a great day, everyone.
Jason from ETF Managers Group. Make sure you check out those ETFs.